All right, well, let's turn now to our question of the day. Is the taco trade back? Taco, that acronym for Trump always chickens out. Lou, what say you? I mean, we had that $2 trillion sell-off on Friday. Green across the screen today.
Look, as a long-term investor that likes to trade around positions, I'll take the taco trade because it presents some real good opportunities. But I think this is what we talked about earlier. Uncertainty in the markets is not something we love. Uncertainty in politics and negotiating trade deals is something that is absolutely necessary. It's leverage, and a trade deal is not done until it's finally done. So I think he's really just, I hate to be cliche, it's not the art of the deal, but it's just saying these outlandish tariff rates helps to try and get people to the table to avoid something that would be so disastrous for the economy. But I think, Brooke brought it up before, we run a real risk with the shutdown and so much of this taco talk really impacting the economy eventually. You can only endure it for so long, the uncertainty over tariff rates, before the economy and behaviors in the economy start to change in a meaningful way that really impacts the trajectory of the U.S. economy.
And Lou, related to this, Citi was out with a new note saying that this could be a moment where the buy the dip instinct maybe runs out of steam. Do you think that reflex still works in this case, or are investors getting maybe a bit too complacent betting that Trump will blink?
But I would tell you all the data that I see, particularly in terms of retail investors, self-directed investors coming into this market, that I don't see the buy the dip mentality stopping anytime soon. It's worked since the tariff day sell-off in April, and there's no reason to think it isn't. I mean, again, today is another data point that buying the dip should pay off handsomely for retail investors who now are controlling 35% of daily trading volume sometimes on stock and options markets.
And Jen, from a policy perspective, I mean, Trump's tariff talk has been all over the map at this point. So I'm curious to hear your thoughts on the taco trade and how you're reading through the tea leaves when it comes to some of that rhetoric.
Yeah, people call it Trump chickening out. I think it's more Trump just trying to negotiate. To Lou's point, he's threatened the 100% tariff, and, you haven't seen China bite back. So I think that's an indication right there. The president is very keen on using tariffs as a tool to bring people to the negotiating table, to push back on situations that we've seen in place for years, right? Decades upon decades. And so China controlling rare earth minerals is not something that is in the interest of the United States, and it's something that China is still trying to flex its muscle over and hold leverage over world economies, right? Not just the U.S. And you heard Treasury Secretary Scott Bessent earlier today saying that all options are on the table, right? The U.S. wants to maintain a friendly negotiation and a friendly relationship with China because we still need each other, and the U.S. does not want to decouple from China. But the fact of the matter is that the U.S. is not going to let China control the cards here.
And Lou, I want to give this last question to you because we've had such a long stretch of low volatility. We have stocks at record highs. Are markets actually more fragile heading into this latest earnings season, which a lot of strategists out there have been saying is critical to the resilience of this market?
Yeah, the low volatility is something to keep in mind. I think what we've seen is such compelling earnings growth coming out of the Mag 7 for quarter after quarter that there's going to be a lot of sensitivity if we see a large name miss by a wide margin. As I mentioned at the top, the last segment, analysts have been way too conservative, and Mag 7 in particular has been outperforming dramatically, putting up 25% plus earnings growth. If we see someone put up a dud, only a 10 or 12% growth, which sounds ridiculous because that's really strong, but in this day and age, it's not strong enough. I think you could see volatility return in a meaningful way because everyone's going to think about what are the knock-on effects, who else might be underperforming and under-delivering on earnings growth. So I think as investors, as an everyday investor myself for over 2 decades, you got to have cash on the sidelines ready to take advantage of these opportunities that come from volatility, which it's just never this smooth sailing for too long. The bull markets never go up and to the right in a straight line. So I'd expect more volatility and be ready to capitalize on it.